Got it.
I'm Candace, a real estate broker and investor, and we have our licensed real estate experts, Melissa Morris and Teresita Nino. And joining us today, we have Miss Melanie Gerber. And our topic for today is, what is a DSCR loan? So Miss Melanie, if you could start us out to, first of all, what does DSCR stand for?
DSCR stands for Debt Service Coverage Ratio. So a typical borrower is expected to provide all this documentation, and on a DSCR loan, they're considered business purpose loans, and they run on a monthly cash flow used to measure the borrower's debt for that property against their instead of using personal income. So it just makes it easier to qualify if you're doing investing.
Okay. And so basically saying you don't have to use your income to qualify for this loan.
You do not.
This would be good for small business owners, self-employed people.
Or people who have multiple properties that may not want to go through all the hassle of all the mortgages, all the, making all the Schedule E's and all of that type of paperwork.
Okay, well, that definitely sounds interesting to me, being a business owner myself. How is the DSCR used in mortgages?
The DSCR is basically used where they use the rental income and what the monthly payment is to determine if you're going to qualify for the loan. So basically, the rental income does not always have to cover the full mortgage, but it needs to at least be 0.75 of the mortgage. Okay, so basically you can handle some loss, but they really want to see a one-to-one, that the rent and what they can make on rent and what your payment is equals each other.
Okay. Well,
or better.
Yeah, and that should be not so hard to achieve, right? I mean, you're getting a rental for that purpose.
That's exactly true. And you are required, some will allow 85% loan to value with 15% down. Most of them want the 20% down. So with that 20% down, you should be able to cover the rent. You should be able to cover itself.
Okay, great. So how is the DSCR calculated?
The subject property is calculated with the gross monthly income, and it's divided by the property monthly expenses. So the expenses are your PITI and HOA.
Okay. So your monthly expense, what about the HOA? And I'm trying to think of some other expenses that you might, what about the tax or anything like that?
So the principal, interest, taxes, and insurance.
Okay. That makes sense. So what are the benefits of a high DSCR?
The higher the DSR, honestly, so if your rent is if your mortgage is $1,000 and your income on that rental is, let's say, $2,000, that's a higher DSCR. So you're actually going to get a better rate.
Oh.
Because the more income you receive or the less risk makes a better interest payment.
Okay. Well, that makes sense. So a high property value, the high DSCR loan also increases the value of the property in the eyes of an investor.
And right. So I guess you can look at it two parts. You have the appraised value versus the amount that you put down.
Okay.
So the loan to value is going to determine part of the rate. Okay. So the more you put down, the lower your rate's going to be.
Right.
And the more that you're going to get in rent versus what you owe is also going to determine the interest rate.
Oh, okay. All right, great. So you gave us the benefits and it sounds wonderful, but what are the drawbacks of a low DSCR loan? What are some of the drawbacks?
Of a low DSCR loan?
Yes.
Are you talking about if it's not covering the rent?
Right.
So I think at that point, they're going to want to see reserves, more reserves,
Okay.
and they may want to see your other properties that may be able to hold the loss of that rental. And they actually, it just depends. Some won't even do it unless the rent gets covered. Okay. They all have different rules. They're also going to look at your FICO score. That's going to have a big factor. So the higher the FICO score, the better chance with the low DSCR to be approved.
Okay. So I think Melissa was talking to me today about it, and she wanted to know what was the current interest rates. And I know it all fluctuates with your credit score and other terms. Can you kind of give us some examples?
Yeah, so I have one in escrow right now. It is a condo, so it's going to have a slightly higher. Condos are going to be slightly more risk than a single family residence. It is valued at 400,000. She's doing a cash out for 100,000. Okay. And she's at a 6.5% interest rate at a 794 FICO score.
Okay.
With a 5-year prepayment penalty. So the prepayment penalty, I notice if you are planning on keep it long term, then no problem. If you're going to do it shorter term, then it seems to be about $1,000 for each year cost up front.
Okay.
Okay. That's what I'm noticing. It is about $1,000 for that rate for each year, up to a 5-year prepayment penalty.
And will you get penalized if you just want to refinance it? You keeping the property?
You need to keep it for 6 months, just like almost everyone. They want and not 6 months, it's 6 monthly payments. Okay. But at that point, you probably want to see if they have a no prepayment penalty or less than 1 year. And really, for an extra few thousand, if you're going to make money on it, it's probably worth it at that point.
Right.
But their whole goal is, to keep it on the books as long as they can. So,
right. How much down is required?
You can do it as low as 15%, but most want 20%. Okay. They want to make sure you have enough equity that you're not going to let it go. It's basically what it is. The more down, the less likely you are to default on a loan, or if anyone chooses.
Okay. So if I was to say, hey, I want to consider this loan, what would be like my first step?
Your first step would probably be to run credit so we could determine around what your interest rates were going to be. You need to find a property so we have an idea of what the rent's going to be, is going to make money. And then basically items needed are very small. You basically need your mortgage and a 12-month history of your current mortgage, your insurance for your primary. So it's only your primary and the rental property and the property you're going to purchase or refinance. No other paperwork is needed for any other properties you may own. But they do want a 12-month no lates on any mortgages. Otherwise, you start taking a hit to rate or they won't do it.
Okay. So they would check my primary resident and make sure that I've been on time on my mortgage payments for the past 12 months.
That is correct.
Okay. And then do I have to find this investment property before the loan is, well, I know before the loan is approved, but before I come to you for you to run like my credit or kind of give me an idea if I will qualify, or is it because it's simply based off of the property? I need to get the property first before I even come to you.
That's not true because I would rather see what your score is, know
Okay.
what we're up against, look at the credit, make sure there's nothing that's going to be a problem, be able to ask questions, because we want to make sure we stay within somebody's payment and all of that. And then we can send out a pre-approval letter so you have that.
Okay. Okay, great. So ladies, do you have any other questions? I know I'm throwing all these questions out here.
Yes, I do.
Okay.
I have a couple of questions actually. And I'm just going to go back, like touching based on some of the things that you talked about. So would this type of loan be good like for senior citizens? Like let's say I have a client that is retired but they have that retirement income essentially coming in, and that's all they have. Would they be able to qualify for this type of loan?
Well, we're not using their income, so it wouldn't matter, but they would need, the 20% down.
Okay, gotcha.
So you just kind of have to decide what's the best loan for them at the time. Is a DSCR loan better for them? Are they better doing a full documentation to possibly get a better rate? Every scenario is going to be different.
Gotcha. Okay. And then I know you mentioned that, we have the property already, and are you running and are you basing it off on your comps, or is this like comps that I can bring to the table? Does that make sense?
That's the question I was thinking about too.
It's going to go through an appraisal with a rental part, and I don't see why you could not hand the appraiser current comps for the area.
Okay.
I would suggest it, to be honest with you.
Okay, got it. And then I know you mentioned that, it was between 15 and 20% down that is required or ideal. But can you kind of touch base back on the reserves? What is that amount, I guess, or percentage that you essentially need to have?
So,
and it depends, I guess, I'm assuming it depends on the property, right? And how the comps are coming out, right?
No, not necessarily. The property won't.
Okay.
It's a standard. The one I'm doing right now, but it's a refinance. Okay. They want actually 6 months on her rental and nothing on her she actually rents. So that's a little different. They want a 12-month rental history. So she's doing a DSCR and she's renting. She doesn't own another home. She inherited the home and is taking over the HELOC loan. So, there's a different scenario there, but usually they want to see 6 months reserves in general. And if you're taking cash out, you can use the cash out. So let's say you already have one and you want to, you want cash out, they'll actually use the cash out as reserves.
Oh, perfect.
Okay.
Perfect. So if I had a rental and my rent was going to be $1,200 a month, I would just need to times that by 6 and make sure I have that in the bank.
Correct, Pete. Principal, interest, taxes, insurance, and HOA. And the reason when I keep saying HOA is my borrower right now has an HOA that's $790 a month.
Oh, wow.
So it does make a difference.
And when you said something about the condos are more riskier, can you kind of say why?
Because in past history, it is known if people let properties go, people are likely to keep a stick house versus a condo first. It's just, that's what we've seen, in the different states. If you have to move and you're living in a condo and you're renting out your primary residence and you're having a hardship, you're going to probably move into that single family residence and let a condo go first. So there's slightly more risk there.
Okay.
I'm not saying there's a lot, but they're
right.
Just in
and
general.
Plus they have that monthly HOA fee that comes around every month. So
right.
So I had a question. So the fact I was actually going to ask if you had to have a primary residence, right? Because there's a lot of people who are renting. Mm-hmm. So if you are able to just have the reserves in the bank and it's based on credit, why are we not hearing, or why do you think we're not hearing more people going for these loans? It seems like a great option. There are a lot of people who have good credit, have the money. but don't own a property or don't have all of those other means to qualify?
Well, one, you have to be able to show that you've rented on time, made your rent payment for 12 months. Okay. But I think a lot of it is this is considered a non-QM type of loan. So it's just not typical. And when the interest rates were really low, people weren't looking at the not typical loans.
Right.
So it just wasn't known as well. DSCR and things have come more available as interest rates have climbed.
People are getting more creative and looking
more creative because, she rents, just as an example, this property is in California, okay? She doesn't want to live where the house that was left to her. She wants to live in LA. She wants to continue that. But this house supports part of her income for her retirement. So she doesn't want to let it go either.
Right. No, I definitely understand that. And your reserves, can you show like, okay, I have money in my 401k or
as long as you're not drawing it or you have at least 3 years is what I'm going to say. I haven't really come across that. But in general, if you have enough to last 3 years, because if you're pulling that 401k already on a monthly basis, okay, you can't use anything past. You have to make sure you have enough income in that 401k for at least 3 years, and then you can use some of the residual.
Oh, okay. Okay. And just to go back to what you were saying, so a person would need to be in their home for 12 months to show that they paid their mortgage for 12 months or to rent for 12 months?
Well, we're just going to look for a 12-year history. No one says how long. Let's say you got in here and so you got into some money and you buy your primary residence. I may need 6 months of rental history and then I may need 6 months of mortgage history. Sorry.
Melanie, my next question is, prior to closing on a DSCR loan, is there a lease agreement that will be required?
No lease agreement's going to be required because they're going to do a rental history. So the appraiser is going to determine the rent. The only time a lease agreement's going to be required is if you're refinancing into a DSCR.
Okay, got it.
Because it should already be rented.
And also, what is the minimum that you can borrow?
A minimum is $100,000, and I believe we do up to 2 or 3 million.
Okay, perfect.
I was curious to know what type of verification is required when you're verifying the rental history or you're verifying the, well, obviously you probably would pull bank statements for the income, but for the reserves, but what are you requesting? Are you looking at the bank statements for the rental payments as well? Are you?
If you have a mortgage, so for rental payments, it's almost easier if they rent from a management company to do a verification of rent, because on the rental, we pulled bank statements on a prior customer that I have, and they then want to still tie it back. So you're still going to have to do a verification of rent. If you don't pay rent that way, Cash App, I notice seems, people are paying on Cash App or whatever, that works. They just need verification that whatever you're paying ties to the lease agreement that you have. So you're going to have to provide a lease agreement too, because they need to somehow tie it together.
So if you use like Zelle, you can pull like your Zelle activity and show these payments coming, or?
Correct.
Okay.
That's actually cleaner because usually you'll have the person's name on there or whatever, which will then match to the lease agreement.
Right.
And then I just wanted to know, as far as, I'm sure people watching this may be curious to know, okay, well, I do have the 20% in the bank. If I'm not an investor, can I, still apply for this loan? Is this only more so for investors and small businesses, or those people who are wanting to,
Anybody who wants rental income can apply for the loan.
So
Rental property, sorry.
right. So it's not, you can't do it for your homestead. It's
Correct. Cannot do it for your
So
homestead.
you were asking, Melissa, like if
Yeah,
you want.
I'm thinking of more so of people who are just starting to invest and are very green and scared of the process. So they do have a 750 credit score. They do have the 20% in the bank, and they just, are scared and maybe overwhelmed with trying to.
Yeah, it don't go off your experience. I mean, it could be your first rental property, but it just has to be a rental property.
Right. And you can look at it. We could, if someone has enough income, then they're not going to have that many documents, then maybe we look at it both ways. And maybe, with the way the market's going, sometimes maybe doing a DSR is simpler and easier and the same rate as a regular investment property with Freddie or Fannie. You just never know. You might as well look at all the different ways of doing it and then make that decision. I always give people their different options if they have them and let them make that decision.
Yeah, okay. I think this is great for someone who's just trying to invest. I think this is a great option.
Absolutely.
And Melanie, another question. So this loan, this is a conventional loan, correct?
It's called a non-QM. So it's kind of outside the Freddie and Fannie parameters. Okay. And so it is. So basically it's kind of considered a conventional, not Freddie, not Fannie. There is no MI because you're putting the 20% down.
Correct. Okay. Yeah. And I was just speaking from like when you are submitting an offer for a home that you want to.
You can just list it as a conventional loan.
Okay.
Okay, that's a good question. And I don't know if you said this or not, what is the minimum credit score? Like what is a low?
620.
620. Okay.
But you're going to pay for that,
No,
I'm not going to. But if you get a hold of us soon enough, any of us, we can work on your score. And I am great at fixing score instead of spending, not necessarily spending money to have somebody fix it for you. I can, that's like one of my specialties. I love puzzles. So
solving puzzles. Ladies, do y'all have any more questions? I'm sure.
No, I think this is great. Yeah.
I'm sure. And before we end this, quick question, and I know you said it before, but I just want to put it at the end. So if I'm coming to you for this loan, what do I need to submit to you?
You're gonna want your credit ran. So basically your ID, your mortgage statement, your deck page of your primary residence, if you have one, your mortgage insurance taxes we can pull ourselves. We'll need to show a 12-month history and then the property and assets to prove that you have the money to put down and where the reserves are coming from. Basically, it's that simple.
Okay. And how long does it take to close? Like, is this a 30-day, 45-day? Like, how long?
You can probably close it in 30 days or less.
Okay.
But it just depends on how on top of it the borrower is and title and everything, working on the file also. It's not many documents, so underwriting takes maybe 3 days.
Okay. All right. Well, thank you, Melanie, for your time and your knowledge and educating us. We'll definitely be calling you with more questions. But we want to really get this information out there to everyone so they are aware of it. And I know there's other options for your investment properties, as far as financing investment properties, but we just want to give people more options. So we appreciate you and thank you for all you do.
No, thank you. I appreciate you guys giving me the time to do this.